We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Bessent. JPMorgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show. Absolutely flying. Bitcoin is pushing 8. I mean, guys, welcome. Happy Monday, August 24th. Absolutely flying. We're not even euphoric. This is the beginning. It is early. This rally will fail like all the others. Everyone's in disbelief. Everyone is sidelined except for you. If you've been watching the show, you know that we've been bullish hype. We've been bullish lighter. We've been bullish Bitcoin. We've been bullish Ethereum. And we're bullish pump fund, aerodrome, and fake world assets. Guys, this is the Rollup. We have a thesis, and we've been sticking to that thesis, and we've been keeping you updated on that thesis. And the thesis is playing out exactly as expected. Doesn't mean we're going to get every move right. Doesn't mean that we're not going to make some mistakes along the way. But guys, if you stick around and you listen and you show up every day and you remain consistent, you will outperform. You will absolutely outperform. And that's exactly what we've done here on the Rollup. Fantastic show for you guys today. August 24th. Big shout out to Plume. We're down in South Florida at Rollup Headquarters South. Plume is the sponsor for Rollup Headquarters North in the Empire State Building, the absolute center of finance, both north, south, east, west. I mean, there's just no other way to slice it and dice it, guys. We appreciate you rocking with us here. Tom Lee, Michael Saylor. I mean, someone's outperforming. And if you've been here watching the Rollup, then you've been outperforming. So, absolute banger show for you guys today. I mean, incredible lineup of guests also. I can just shout out a couple of people that we have coming down the pipeline. So today, obviously today, you guys have seen the speaker graphics. You've seen the movie posters. You've seen the lineup. We've got Trevor of Lighter. He's going to be joining us in just a moment. Then we're going to get Seth from Franklin Templeton Digital Assets. And then we have Taha from Paragon. So great show for you guys today. We're going to take you through all the news that happened over the weekend. Okay. But then, I mean, just to give a quick shout out to the guys that we have coming on later this week, we've got Alexander of Aerodrome, and we've got a big Coinbase announcement in just a minute that we're going to go over. Alex is going to cover that with us this week. We've also got Zach from Grayscale. We know they are launching their Zcash ETF. So that's a massive, massive announcement. You know that we've been tracking Zcash since, I mean, just for months we've been tracking Zcash. You guys know that it's part of the monetary premium and the privacy thesis as the AI surveillance state continues to develop. So we've got Alex, we've got Zach, and then we've got Haunan, friend of the show from Codex. Doesn't stop there. We've got Robert Leshner and Ethan Buchman. These guys are absolute OGs, both of them in their own right. And then we've got Scott CoinList. We've got Mike from EtherFi. We've got Mike Belshi from BitGo. This guy was shaking hands in the White House with President Trump last week. Okay. And now he's coming on the Rollup. And then we've got Jiang from Securitize and Austin Barrick from Relayer Capital. So absolute star-studded lineup for you guys. And Freedom Guy, you know it. You love it. If you're here and you're watching day in and day out and you're consistent on the Rollup, you will outperform. Guys, big shout out to Plume as always. Also, big shout out to Denari. Tokenized equities are coming, okay? And this is our tokenized equities partner. They're doing incredible things. They've been able to crack tokenized equities in the breadth dimension. So they have a very broad swath of tokenized equities that they are deploying and developing on chain. We are keeping track of all of those at .denari.com to get exposure to the equities market on chain. Watcher 8582, what's up? What's up? Welcome to the show. Denari is our tokenized equities partner, and we've got some tokenized equity news to get into in a little bit. But first, we've got our weather. It is sunny. What do you expect? It's bull market and it's sunny. I mean, I wouldn't quite call it DeFi summer 2.0, but I mean, what do you want to call this? You call this the revenue meta summer? The revenue summer, the what do you want to call it? The tokenization fall. I mean, it is the rise of tokenization. It is the rise of tokenized equities, and it is the absolute domination of revenue in this disruptive, innovative digital assets market. As always, weather is brought to you by the Rollup here, sunny South Florida. Watcher, very strange to be called out. I was browsing some other side as my name drops. That's what we do here on the Rollup. We speak directly to our audience, directly to every one of you. We want to provide you with the answers that you're looking for and the information that is going to help you outperform in this market. So stick with us, keep coming back, and we will continue to outperform together. Guys, big shout out to our stablecoin partner, Frax. These guys are absolutely crushing open stable borderless. They're on the front end, ahead of the curve when it comes to genius regulation. We know this has been a big catalyst for the stablecoin market. We also know that Bessent is going to absolutely print T-bills. These are short dated bonds. He's selling the long end. He's buying the long end, he's selling the short end, and we anticipate stablecoin issuance companies are going to be a massive, massive buyer of short-dated treasury bills. So keep an eye on this. Stablecoins are a systemic component of our national security, and Bitcoin's pushing $80,000, Ethereum's pushing $2,500, Solana is about to crack the $100 mark, Near's above 2, and Chainlink is running. Chainlink, big announcement here with Coinbase. We're going to get into it. I actually don't even want to spend too much more time on markets because what is there to talk about? I mean, equities are a little lower. The digital assets to the S&P ratio flipped, is now bullish. Digital assets are set to outperform. I was chatting with a buddy of mine who basically said that the Treasury buyback is going to create confusion and unpredictability in the bond market. We know that this is an attempt to run the economy hot. Bessent doubled down. He went and he made the announcement doubling the amount of buybacks that they're doing in the long end. Then he went on CNBC. He said, we're not going to stop there. We're going to do more, at least $4 billion every single auction. And then today there was news that he might drain the SGA or the TGA, which I think is the Treasury general account. And that's $950 billion that he can use to continue to buy treasuries off the open market, inject liquidity into the supply, and just money printer go burr. Not new credit, but it is credit that had previously been frozen, not really moving, and now it's going into the open market. And remember how money is created. It gets into the market, it gets into the banks, they loan it out, they do the money multiplier, and they issue credit. And that is part of the money printer complex. And the TGA getting drained by Bessent and the Treasury is a catalyst to the money printer. So remember, this is just the beginning. They're quite literally preheating the money printer. It's not turned on yet. This is like preheating your oven before you're about to cook. They are preheating the money printer. We are still so early. Markets powered by Zama, as always. Digital assets pushing 80K on Bitcoin. ETH, I mean, just crushing. And obviously all eyes on the bond market as we're trying, Bessent is trying to stave the long end and potentially just absorb and cancel a ton of debt in the midterm, medium term, 10-year. I saw a bunch of rumors flying around, all in an attempt to issue more debt in the short end. So let's keep moving along. We are going to keep moving and tell you guys about Near, our AI partner. These guys are at the convergence and the confluence of several momentous trades and narratives happening across digital assets, across AI. We know the AI build out is continuing. The entire attempt in order to rectify the $40 trillion national debt here in the United States is to accelerate the capital build out from AI and grow our way out of the debt. We attempted austerity. If you guys remember, tariffs, Liberation Day, Doge, all of this was the facade of austerity, right? We're going to stop spending money. We're going to stop contributing to the debt. When in reality, the plan all along was to run the economy hot, grow our way out of the debt, and basically run inflation high, but run the economy even hotter. I mean, if you have 7% GDP growth, who cares if you have 5% inflation? Because net, you're actually deleveraging and devaluing the currency, which is, the opposite of inflation. It's actually healthy for a market if you can get there. But technology, we know, is deflationary. Guys, let me tell you about our first piece of news today. We're covering the announcement from Bitwise and Coinbase. Today, Coinbase launched tokenized stocks on Base. This is massive. This is going to have far-reaching implications across several of our partners. Chainlink is sponsoring and powering this partnership between Coinbase and Bitwise. Chainlink is a part of this. Shout out to the entire Chainlink Marines out there. as Andy is saying in the chat, higher. He's speaking directly to Zcash, Chainlink, Coinbase, Bitwise. Aerodrome is well positioned for this, extremely well positioned for this, because Aerodrome is the liquidity engine on Base. Base is where these tokenized equities will be deployed, and Aerodrome will help provide liquidity and ultimately grease the wheels for the tokenized equities build out that's happening between Coinbase and Bitwise. Also, Bitwise, friend of the show, you guys must have saw Matt and Ryan come on the show a couple of weeks ago, give their thesis on the market, as well as the tokenized equities build out that is happening right before our eyes. Tomorrow, Bitwise will show you what we're building on top of them. So this is fundamentally a Coinbase tokenized equities announcement on Base. Bitwise is coming in and building on top of this tokenized equities offering from Coinbase. And we've got a video here that we're going to show you guys, a little announcement video. Let's go ahead and play it. Available 24/7, 365. Swap, lend, borrow, build, base.org/stocks. This is huge. I mean, we know the equities market is $100 trillion. Obviously, it would have been nice to get a lot of this built out before the huge run up in equities. But if they can nail the macro liquidity landscape and we can get accommodative monetary policy, we're going to end up steepening the bond curve and pouring money into all of the asset classes. If you remember our daily equity segment from last week, you know that this bull steepening is going to be a hot economy, a hot business cycle, and it's going to be bullish for scarce assets as well as equities. We do believe digital assets will outperform in this bull steepening paradigm, but nevertheless, digital assets and equities are both set to rise. Let's keep going. I know we've got a Chainlink tweet that we're going to pair nicely with this. And so we want to make sure that we get that in here as well as we round out this tokenized equities offering. As you guys know, there's tons of price data. Let's go ahead and talk about how pricing data is served to this Coinbase announcement for tokenized equities. So Chainlink here, Coinbase selected Chainlink as their oracle. Really no surprise given that Chainlink has really taken the seat as the industry standard. Coinbase knows this. Chainlink has been around a long time. Coinbase selects Chainlink as the official Oracle infra powering its new tokenized stocks on Base. Chainlink is now enabling millions of Base users to lend, borrow, and trade the largest publicly traded US stocks on chain. And remember, this is 24/7, 365, swap, lend, and borrow. Do more with your stocks. And so this is ultimately the best raw material for DeFi that we've seen for a long time. Chainlink obviously powers a ton of DeFi, meaning Aave, right? Lending markets, decentralized exchanges. Chainlink is plugged into all of this. This announcement from Coinbase is now bringing on equities, $100 trillion of assets that are now composable with the rest of DeFi. Chainlink is helping to bring composability to this asset class. Little quote here from another friend of the show, best raw material for DeFi, stocks bring yield. They pay dividends. These are fundamentally securities. It's something that we've avoided on chain for a long, long time because of the Gary Gensler villainous era that we had before the lovely SEC and CFTC that we have today. But what we're seeing now is that stocks bring yield, they pay dividends, and lending shares to other investors is one of the oldest and largest yield businesses in finance. Okay? With trillions of dollars of stock on loan at any given time, stocks can also be better collateral for securing loans powered by Aave on Base. This significantly widens the product set that lending protocols can serve. And so given that Chainlink is sort of this connective tissue between the existing native players in DeFi like the Aaves of the world, and now working with Coinbase to bring on tokenized equities, we anticipate that Chainlink, given that it's at the confluence of several momentous narratives, is poised for success. And remember, our idea here is outperformance, right? We are now having thoughts around outperformance, forming theses around outperformance. And so DeFi as it's positioned to subsume so much capital as a result of the tokenized equities build out, is significantly positioned to outperform. We think that these guys, DeFi, EVM, ETH mainnet DeFi, has significantly underperformed up until this point. We believe this trend is going to flip. We're now at an inflection point. Chainlink and Aave are in position to do extremely well as this trend flips. Also, we want to put Aerodrome into that mix because they are part of the liquidity engine on Base. These guys are friends of the show, and I am extremely excited to see the amount of capital come on chain as a result of this tokenized equities build out. T420 in the chat, link is just for people who like holding it because of its fame. Look, it's famous for a reason, okay? There is some element of longevity and sustainability that can be said for Chainlink that cannot be said for so many other projects in the space. You have to do something right in order to stick around for so long. These guys have been here from the beginning, building out the DeFi ecosystem. Now that it's being recognized, now that the industry is being legitimized, and you have Sergey up there with the president of the United States helping to legitimize the industry, there are companies that are in position to be the primary benefactors of the legitimization of the industry. This comes from better regulation, the SEC and the CFTC, as well as the Clarity Act, if and when it goes through. And we believe that certain DeFi protocols, Chainlink included, are some of the primary benefactors of this legitimization of the industry. And so this is what we're continuing to see. Link token is not just a meme. We are absolutely tracking this. They're building and they're building and they're building. Just reading a little bit more of the chat here. Greg, I think you've been vindicated, as well as Edward. Nest Force Unite. Bro doesn't even breathe. Yeah, Link token's not just a meme. Fake world assets going stupid. Chainlink to 100. Inflection point. Link is the best. Guys, keep the comments coming. Hit me with some questions. We're going to bring our guests up in a few minutes, and we're going to get this party started. Let's keep going. We've got another friend of the show, Lorenzo from ARK Invest, who says it's becoming abundantly clear that being the fast second mover might be the best place to be in crypto. I mean, this is lighter coded. Mr. Lighter OG, Edward, you guys have been tracking Lighter from the beginning. You guys have been in since, sub $2 Lighter. Now I saw Lighter was pushing $3.50. And so now we have Lorenzo, who works at Kathy Wood's ARK Invest, talking about how the fast second mover is the place to be. This could point to Kalshi in prediction markets. It could point to Lighter in the Perps market. It could point to Circle in the stablecoin market, or Athena or Sky. Second place is kind of up for grabs in the stablecoin market, but there's plenty out there. Frax also has a grab at it. Plenty in the stablecoin market. And, we know how this could play out. It's becoming abundantly clear that this is the case. We have enough data at this point to say that being first matters much less than in other industries, where technical moats tend to be much deeper and harder to replicate. Base has been around for almost 3 years. However, Robinhood Chain has been around for hardly 2 months, yet Robinhood was able to take a lot of the learnings from Base, executing on them extremely quickly, and enter at a time when the infrastructure and crypto primitives are far more mature and efficient. There's one more thing that I would add here, and we've gotten a little bit further away from this in recent times, but given that crypto and digital assets has fundamentally had an open source ethos, a lot of the technology that would have been a moat in some other industry is actually not defensible at all, because we have this philosophical point of view that all of this technological moat should be open source and available for everyone to learn and build together. And so that is going to dwindle down some of these technical moats even faster than they would have otherwise. Lorenzo goes on to say that it also Robinhood got to bypass a lot of the distractions and dead ends along the way, social graphs, creator economy. And so look, there is this very, very timely point of an industry and a market build out in which it makes sense to enter the market. And so that changes depending on the size and scale of your company. But we've seen the decentralized exchange landscape. Uniswap obviously took an early lead. Aerodrome came out, and now Aerodrome took the lead on Base, right? They were able to learn, use upgraded tokenomics, mechanisms, flywheels, right? Liquidity providing mechanisms that allowed them to be more efficient before developing some of the tech debt and philosophical debt of decentralization, some of these other things that is holding back some facets of the industry. This is true across stablecoins, decentralized exchanges, lending markets, perps, prediction markets. All of this is now showing that this is the case. Let's see the chart. I believe this is Blockworks data. Blockworks everywhere. L2 transaction fee revenue, you can literally see when Robinhood launched. I mean, they superseded what was happening on Base, and now, I mean, they're consistently leading all across August. And so obviously this was a timely time. This was a time to enter the market. Not everyone could have replicated the success from Robinhood, but if you're an incumbent, meaning an incumbent in the fintech financial institutional space, and you're now watching this this innovative space, then, well, you have the opportunity to enter the market at very particular times. And so if I'm lighter, right, I saw the success of Hyperliquid and now I'm flooring it. And I can learn from Hyperliquid, right, on both the tokenomics side, the buyback side, look at the reinforcement of the flywheels as these things go hand in hand. If I'm the stablecoin side, I can take a lot of learnings from Tether, from Circle, these sorts of things. And we can start to piece together how a disruptor could come into a rather early market, leverage some of the learnings from these technology companies building in public, either leverage the tech right off the bat as a result of it being open source, or gauge community sentiment and adapt a lot of the feedback that a company gets from being a first mover, implement it, and play leapfrog. This is what I think we're seeing in both digital assets, and you can see it in AI too. These models leapfrog, right? Once something gets put out there, it gets released, it gets stress tested, it gets reverse engineered, it gets distilled. We do that in every industry. We do that in crypto as well. And then you see Robinhood be able to leapfrog. Well, look, what was Robinhood's secret sauce? It was equities, okay? It was a result of Robinhood being a broker-dealer. They had significant traction and market share in the equities market, relative to the likes of all brokerages out there. And so tokenized equities was their differentiator, right? And then they had meme coins. They were able to kind of, play that game as well, two wolves. But they're ultimately going for this RWA. Now, today, you have Base working Coinbase and launching tokenized equities offering. And now Base is set to sort of understand and watch what happened with Robinhood, right? How excited people were about some of those offerings, right? And now they can take those learnings, go back to the drawing board, work on the product today, release the product. And I anticipate actually Base could leapfrog Robinhood as a result of this tokenized equities offering coming out from Base today. With the likes of Chainlink, Aerodrome, Bitwise, all of these guys now building on top. I anticipate a second wave of adoption coming from Base. These guys are not dead yet. And ultimately, this is healthy competition in the L2 space from the incumbents, the first movers, right? The disruptors and innovators, the second movers, and then ultimately these guys going back and forth and battling for the number one spot. Atan asks, are we rich yet? Atan, just stay patient. Give me some sound effects. It's all going to be okay. We're all going to make it. Let's keep going. We've got our first guest ready. Let's do one more because I see a tweet from our friends at Near. Okay, and these guys are crushing. And so why don't we just cover this? Near powers first major quantum resistant crypto pilot. I do think this is going to be huge. Obviously, you know what's happening in Zcash, and we know how important that is, to the private money ethos and landscape overall. And now we have Near also pushing on the quantum resistance framework. I mean, if you're looking for some of the top, most technical teams in the entire space, you probably don't need to go any further than Near and Zcash. Okay. If you're looking broadly, if you're looking AI, quantum, just well-rounded technical teams, you can obviously throw Chainlink, some of the early builders in the digital asset space and infrastructure. But if you're looking for how these things are going to integrate across sectors, right? How digital assets is going to play a role in quantum and play a role in AI, right? No need to look further than Near and Zcash. Near here, bank and regulators are testing post-quantum wallets. The Responsible FinTech Institute and Safe Haven Initiative uses a variety of standards with MPC, bringing in Bison Bank, different banks, and there's a full white paper and open sourcing of the technology to be announced. There's a variety of opinions on this, but here at the Rollup, we believe in the importance of quantum research. There's definitely a casino funding the research lab sort of dynamic that's in play here. But ultimately, quantum could have significant repercussions across digital assets, AI, economy, globally, medical, like so many things that quantum is going to touch. And we want to be ahead of the curve on here. Bitcoin is sleeping at the wheel, could get caught behind the 8 ball, but there's some really, really talented teams that are working hard on this technology and on this research. Okay, guys. So that's going to be it for news today. We might come back a little bit later if we have the time, cover more headlines. But let's go ahead and bring up our first guest for today because this one's going to be good. This one is going to be good. So we are going to bring up Trevor. And this is going to be fun because Lighter is on an absolute tear. And so Trevor is going to talk to us about the entire landscape there at Lighter. And he's doing investor relations at Lighter. So we're going to get a full download. We're going to bring him into the back, and we're going to bring him up on stage. And I'm excited because you guys obviously are familiar with Lighter. This is exactly what Lorenzo was talking about in his tweet, is the innovative disruptor in a sector. Lighter is a zero knowledge setup. They've got, obviously the Perps exchange. They do so with ZK. It's a little bit more of a differentiated technical offering. They're running $39 billion a day in 30-day perp volume on basically $500 million of TVL. It's also the exclusive perpetuals partner inside Robinhood Wallet, splitting revenue 50-50 since Robinhood Chain mainnet launch on July 1st. Just last week, Lighter's liquidity provider Vault started holding spot ETH inventory to support basis trading, and the team is targeting Q3 for accepting a much wider range of collateral from tokenized stocks to gold. Trevor's ready in the back. We're going to go ahead and bring him up. There he is. I think it's his first time on the show. Trevor, welcome to the show.
What's going on? It's a pleasure to meet you.
Absolutely. It's a pleasure here as well. We've had Vlad on several times. We've talked to Camilla, so friends with the team. And it's your first time on the show. You guys are absolutely crushing. Probably fun times over there with the recent movements here. We've been having some fun as well. We're calling this the pre-bull phase. Not getting too euphoric because it still feels incredibly early, but you guys have been on an absolute tear with Robinhood Chain, with the build out. Vlad was at the CFTC advisory meeting. So as investor relations at Lighter, I think you've got plenty of ammunition to talk to investors about all the good things that you guys have going on there. I'd love just a little bit more of a, kind of a story is how you found Lighter and what you find yourself doing there on a daily basis today.
Yeah, absolutely. I mean, yes, the price has been great, but there's still so much to do. It feels like we're always behind. There's always more to do, which is a great spot to be. The whole team feels that. So love to be around this team. But yeah, my background is actually original traditional finance. I worked at a multifamily office building fund of funds. I helped build fund of funds for our clients, helped run a liquid model portfolio as well. Did that for 3 to 4 years, left and went and joined a liquid hedge fund actually, and did that for a little bit, and then joined Delphi to do research and consulting. Spent some time on the venture side with Jan as well, and for the better part of 2 years, I focused on Perps, and that's kind of when I found Lighter. So I've known someone on the Lighter team, various people for the last year and a half now, and they're an incredibly stellar team, and got the opportunity to join the team about 6 months ago, and so joined about 2 months ago after some back and forth. But it's been a lot of fun being here. Largely lead investor relations. It's an incredible team. I've been very impressed to see them kind of grow into a tech team, a crypto team over the last 12 to 18 months, and the momentum they've been building. I mean, price is reflecting it now, but this is a bunch of little things compounding over the last 24 months really.
Wow. Yeah, it's been incredible to watch because there's been so many developments that we've seen both on the technical front, the partnership front, and then obviously now the market sort of realizing what you guys have been up to, as well as not to mention the regulatory front. And so, we've had several conversations with Vlad. We get really technical and we kind of, get into the weeds on some of the ZK stuff. But given your role at Lighter, let's keep this one relatively high level, talk about some of the partnerships and talk about essentially what Lighter is as you explain it to investors, maybe at the institutional level, because I have a feeling now with the market re-rating this, there's a lot of people that are discovering Lighter for the first time. And they're coming to Lighter and they're coming to Perps and they're realizing that you guys have a serious business, $39 billion in 30-day volume, $500 million in TVL. How do you explain Lighter to someone who is just entering the perpetuals landscape, getting familiar with it? How do you explain Lighter to these people?
Yeah, absolutely. I mean, we're a crypto tech company that offers a new way to express a bet to institutions and retail, and that is the perpetual future. So I like to say you can think of us very similar to an exchange. And that's kind of how I go about explaining the business. We're an exchange. We offer this new primitive that's very complementary to spot, to perps, or to options, to binaries. It's a very complementary instrument, and it's another way for institutions to hedge. You can hedge balance sheet, you can hedge existing positions, and it's also a good way to express linear leverage exposure to underlying assets. And we can, generally speaking, do this on just about anything with a time series.
Beautiful.
And as an exchange business too, like generally speaking, we're like exchanges are also generally speaking like a relatively high margin business, and so that's always like a good story. It's like, okay, we're this high margin business, we're growing really fast, and I'm biased here. I've been focused on Perps for 2 years, but I also think Perps as like a tech sector is one of the fastest growing verticals in tech outside of AI, and in AI I include robotics, but we're growing at a rapid pace. We continue to see adoption. We continue to see interest from institutions, and that ranges from brokers to exchanges to single multifamily offices. From the investment side, it's across the spectrum. We're seeing lots of interest, and it's an amazing time to be building. And it's been a lot of fun over the last 12 months, even though it's been a bear.
Yeah, right. That's what they've been saying, but it feels like we're on the precipice of something much, much greater. And so, you're talking about perpetuals as one of the greatest technological innovations, not just in fintech, but just broadly. Maybe you could just explain that a little bit more. Why is perpetuals so significantly different, unique, and better than other financial instruments that we've seen before?
Yeah, it's incredibly simple. Like the closest thing, could probably think of a CFD, which you'd typically see in traditional finance, which is a way to get leverage, call it cheap leverage. But not everyone can trade these instruments. They're pretty restricted to whether it's accredited investor, high net worth individuals. It's hard to get cheap leverage. Going to interactive brokers and getting margin isn't the easiest thing in the world. This is super simple. I loved it. I was speaking to one of my good friends who's now at Delphi. Before he was in traditional finance, and I remember the first time he traded a perp, he called me. He goes, "Dude, that was a magical experience." Because we both come from traditional finance, and being able to get leverage to short or long an asset is like somewhat difficult, and not everyone can do that. He goes, "It was incredibly simple. I deposited my money into the exchange, and I just hit short. And like my leverage, he wasn't a Degen, he was at like 2x. He wasn't sliding it to 50. And he's like, it was incredibly easy for me to use. It was a magical moment." And so I think a lot of people have this aha moment. I have a lot of friends who are at various financial institutions, BlackRock and whatnot, and they're like, "Yeah, we trade perps. We love perps, like individually, not as a company, but they do individually." And like it's an instrument that was like it's a magical moment to be able to open up this platform, deposit $100, and be able to start leverage trading an instrument, and it was incredibly simple. And I think this magical moment, a lot of different people have had this across finance in general.
Yeah, and that I think is a really important point, because this, for a while, was just a crypto native sort of instrument, just used to trade digital assets. But that is no longer the case. And I think that's why we're seeing adoption broadly at the highest levels of finance now. Vlad in the CFTC Advisory Innovation Committee, kind of recommending to the CFTC how some of these things should be regulated. You guys have this massive partnership with Robinhood. Maybe you could talk about the partnership with Robinhood first. Why do you think Robinhood chose you guys as one of the pretty premier partners of this space rather than building it out themselves or going to someone else? Why did Robinhood choose Lighter?
Yeah, I think, and this is something I wrote about when I was at Delphi for quite some time as I was underwriting the Lighter team, is they have this very much so white glove approach to partnerships where we have forward deployed engineers. I know a lot of the frontier labs have kind of coined that. We also have forward deployed engineers that we will send to offices or just use remotely to help teams build out their perp offering to their users. And so we take a very hands-on approach to working with our partners. And this goes for Telegram and others as well, not just Robinhood, where we take a very much so white glove approach. We help you integrate. We don't just throw an SDK over the fence and say good luck. We're very much hands-on, and we're wanting to work with these teams. And I think if you look at the history of partnerships in traditional finance and business in general, like, you need to be a good dance partner. You need to have friendly economics. You need to be able to help each other out. And that's something we think we do really well. And so when we were working with Robinhood, they wanted their own instance. And so we were very happy to build that. And we're happy to build those for the right partners. Generally speaking, we think most of our partners will be better off just plugging into our partner attribution, which you can access our SDK, access our liquidity, build the front end. And we think most users get, and most businesses get great use out of that. But for one-offs, we're happy to build an instance for them as well. And we're just a really good dance partner with a lot of the teams we work with.
And could you explain the economics behind this partnership a little bit more? Maybe there's NDAs and things that you guys have, but we're all obviously, at least on this show and a lot of our audience in our chat here, we have calls for lit to $8. So the audience here is pretty familiar with the offering. And the buybacks are, obviously an important piece of this story. And so maybe you can help us understand the revenue profile of the Robinhood partnership and how that translates into buybacks for the Lighter token.
So starting just with the Robinhood instance, we have a 50-50 rev share with them. And this is public. They announced it a month or so ago now. We have 50-50 rev share, and that's both on the perpetual futures that trade through the Lighter instance on Robinhood and their stock tokens. Their stock tokens, we also have a 50-50 rev share over there. And if you're following this on chain, 100% of the revenues kind of come to us, and then you'll see 50% go back out to them, and then we take that 50% towards buybacks. And so for those that don't know, we do buybacks with 100% of trading revenue on the main instance as well. And so this is the same. 100% of the 100% of the revenue that we get from this instance goes towards buybacks, and we continue to do that. And those are the economics. And with our other partners like Telegram, Marana, and others, Pair Protocol now that was announced today, generally speaking, we charge 0.5 bips or 0 bips for our partners. And so we take that, they can charge whatever they want on top, which we view as very generous, and we view that very competitive, and we think that'll be competitive in traditional markets. And what do I mean by that is if you have an exchange that has a hurdle rate, so if you're a builder, you have to pay the exchange 4.5 bips of everything you make. That means you have to charge a minimum 4.5, and you're not making anything there. So if you want to keep 50% of your revenue, you have to charge 9 bips. Okay, so then you're giving 50% of your revenue away to someone else. Versus if you worked with us, you could charge 9 bips and keep 95% of that. And so you can almost 2x your revenues by working with us. And so we view that as very competitive. We think that'll be competitive as Perps come to the US. We think that'll be a very competitive offering to traditional financial institutions as well. And so there's kind of like a holistic view of like the way in which we work with different partners.
Yeah. So this is a massive build out, right? The tokenized equities market in general is $100 trillion plus. And you've now gone with Robinhood and partnered up, right? And providing liquidity, not just to crypto native assets, but now tokenized equities. And you kind of talked about the revenue profile and the buybacks. Now, as we see regulation improve in the US specifically, I'd imagine that's going to open up the floodgates even further. And so how different do you expect the perpetuals landscape to be post regulation, post perps, legal and allowed in the US, given that you're already working with, Robinhood, financial institution, and already have tokenized equities, tokenized stocks offering through their stock tokens, you're already servicing this industry in that regard. How important do you think regulation in the US is to open up the aperture even further?
So when Vlad and team built Lighter, they built it in mind with perps being allowed and regulated in the U.S. And we think that's true. I think the last week or two has been, I think this kind of validated that thesis somewhat. And we think perps overall is going to be 100 times more competitive over the next 5 to 10 years than it has been the last 24 months. I think most of us who have been in crypto for the last 3 to 5 years, we've seen perps evolve over the years, and especially over the last 12 to 24 months get really competitive. Everyone's still farming various perp dexes. Lighter was one of those, and there's still many more to come. And a lot of people view that as competitive. We think it gets much, much more competitive when you open up the U.S. And we think that, I think it's going to be a highly competitive vertical because the TAM is so large. I mean, you mentioned it, the equity market is so big, tokenized equity, that market is massive. And the same for perps. I mean, you think about crypto relative to equities. I don't know what it is today, but it's, somewhere between 30 and 50 times larger, which is a huge TAM. And then that doesn't even include if you go into FX markets, which we think is also like a pretty high growth vertical for us over time. And so like the TAM is absolutely massive, and we think it gets incredibly competitive, but we really love how we're positioned. We're open source, we're decentralized, we started in the US, we're still here in the US, and we plan on staying in the US. And so we really like the relationships we built in DC and with others around the US. And globally, like we don't want to just focus on the US, like we want to work in different parts of LATAM, we want to work in Asia and things like this. We announced our partnership with BitCub, and they're in Thailand. So we want to continue to be everywhere else, but like we're highly focused on the US just because the US is still the capital markets of the world, and that really hasn't been unlocked yet for Perps.
Yeah. And I mean, this just feels like a massive win. It feels like a massive win for users who ultimately want access to these products. Obviously, we've been kind of handicapped by the regulatory agencies that were in place, before the SEC and CFTC regime that is in there now. Gary Gensler, prohibited anything that even resembled a security of, navigating on chain. And now we're bringing things that we know to be true. We know these things are securities, they're equities, but we're bringing the best fintech technology and applying it to the asset classes at the largest scale of finance. And so it feels like ultimately the win here is making everything more efficient overall. We've got a comment from our chat here, a question for you. Edward in our chat has been a big Lighter fan for a long, long time. He says, can you ask Trevor what the specific USA Robinhood Lighter strategy is in terms of Lighter powering anything on the core app, Perps, tokenized stocks, options, or is it all on Robinhood Wallet?
Yeah, I think that'll be TBD based on regulation. We are flexible. We have a great relationship with Robinhood. Obviously it'd be ideal to be in their main application here in the U.S., but we just want to continue to maintain that relationship. And as regulation unfolds and licenses come, then we can talk about that in the future. Probably a little bit of a political answer for you, but there you go.
You gotta stay. You gotta be a political. You gotta have the demeanor of being able to balance these things. So, no, it makes sense. I mean, you also mentioned Forex, and I'm just curious. Do you have any metrics behind? First, let's just start with the Robinhood announcement. Do you have metrics behind, where you guys were pre-Robinhood with, the crypto native asset class? What kind of revenue were you guys doing? What kind of volume were you guys doing? And then post Robinhood, once you guys integrated stock tokens, how large of a jump did you see in volume, revenue, et cetera?
Yeah, we'll start with the main instance, the main Lighter instance. We have seen, our RWA percent of OI and volume, OI specifically, go from really close to zero about 8 months ago to close to 30% today. And we've loved to see that growth coming from the asset allocation world. I love to see asset class revenue diversification. So I was like, this is great. We're less cyclical to crypto cycles. This is incredible. And I want to continue to see that grow. I mean, if crypto markets really are coming back, as we've seen over the last week, I would expect, maybe RWAs as a percent of OI and volume to maybe trend down just because we're seeing retail and speculation come back to crypto, but we want to continue to see that grow. We think that's a huge growth opportunity. We want that with both our Perps, with our options, with Spot as well, and so we want to continue to grow that. And on the Robinhood instance, specifically, roughly 50%, I believe it's 55% of OI is now RWAs. And so we love to see that growth. We know we're very aligned with Robinhood and wanting to bring TradFi on chain, and we're excited to be helping them in that. And so roughly 55% of our OI is actually coming from RWAs, and we're incredibly excited for that growth. And the user growth over the last 2-3 weeks has been massive for us, and we love to see that. And we're excited for where they're going to go in the future and how we can help them.
Beautiful. And this was kind of the build up to my question around the Forex market. I mean, there's been a couple of projects that have attempted this. We haven't really seen this built out significantly at scale because there isn't really a regional stablecoin, market out there right now. Stablecoins are dominated significantly by USD denominated stablecoins, to the tune of 99.5%. And so, given that's sort of the dynamic in the stablecoin world, why do you think Forex is such a large potential addressable market that Lighter can help to facilitate?
on stream. But we're excited for that growth. We're working with various partners who are incredibly excited. I mean, I think if you think about potentially hedging balance sheets and things like that as well, hedging currency, like I think if you spend a lot of time with desk and people trading currencies on Wall Street, it is incredibly painful to be able to try to hedge your book after 3:30 on a Thursday. Like that is hard. Liquidity isn't great. That is a very fragmented market that is relatively inefficient and very inefficient after hours and weekends. And this is something like blockchain was built to help solve. And so it's a very fragmented market, and we're excited to help make that more efficient. I don't think this is something people talk about and get super excited about over the next 6 to 12 months. But when we look out 2 to 3 years, we do think this is definitely going to be a really big market. But I don't think it'll get really exciting over the next 12 months, but it's something long term that I'm very excited about.
Okay, another very political answer.
Yeah, sorry about that. I apologize. I hate when people answer questions like that. Now I'm that guy.
No. You got to do what you got to do. Like you said, There's plenty that you guys are cooking. We know you guys ship fast, which has been just very, very cool to watch as a user of the platform, as well as, a friend of the team. And I'm just curious, what is like the culture like? Like I'd imagine, especially now inside with these market conditions and the pace at which you guys ship, it's very exciting to be working at Lighter. Also, given the new potential addressable markets, you guys might be hiring. Like what is it like? Just speaking to the culture at Lighter these days.
Yeah, absolutely. I think Lighter's a special place. So before this, I was at Delphi, and I still believe that was one of the best places I will ever work. The team there is incredible. Anil, Kevin, Jan, Ashwa, Cedrus, incredible team. So much ingenuity. Can't speak highly enough for them. But it's really fun to be at the bleeding edge of tech here and here in the U.S. as well. So incredibly excited for that. It's incredibly competitive. Most of the team is former athletes of some kind or Olympiads, math specialists, and so everyone's incredibly competitive. And so it's very competitive internally, but we very much so encourage one another. In what we're doing, we champion each other, but there's definitely a high standard here. We want to work with the people we hire. We want to be some of the smartest people in their vertical, and we want to bring them onto the team and continue to grow the team. But it's incredibly competitive. We're competitive not with each other, but with the market. We want to be the best, and we're not satisfied where we are today. We want to continue to grow another 10x. And a 10x and a 10x and a 10x. We want to continue to grow and hit escape velocity. And so I think the team has never been more locked in than they are today. And this was true 6 months ago when the token was down, 60 to 70%. And in 6 to 7 weeks, the team was incredibly locked in then. And we are now as well.
Well, it's happening. It's happening right before our eyes on multiple fronts. I mean, Perps in general at the confluence of so many factors here, regulatory. We've coined the revenue meta. You guys are absolutely printing. And like you said, Forex, native assets, in addition to RWAs, stock tokens, these things are coming online and fast. And Lighter is one of those protocols, which is just at the receiving end of the tokenization of new asset classes. So $100 trillion, stock tokens, $1 trillion Forex market. I mean, as these things get tokenized, you guys are right there to, just sit there and just catch all that volume.
Yeah, it was funny you mentioned the revenue meta, and it's so funny it took crypto a decade to get to a revenue meta. And I understand there was a ton of experimentation, but it took an incredibly long to get to revenue meta. I remember being back in TradFi and pitching assets, and they're like, what are the cash flows? Yeah. How much money? What are their earnings? And so it's funny, we're finally at this revenue meta, and my bet is within the next 12 to 24 months, we go ahead and get to net margin and free cash flow, and people start to look at these, what's your earnings, and things like this. And I think over the next 12 to 24 months, the industry will mature 10 times what it did in the last 10 years in 12 to 24 months as we begin to start looking at the earnings of these businesses as well. So excited for that to come. I think that the industry will mature quite a lot when that happens.
That's where we are. And it's multi-level here. Whereas, the first level that we've talked about as part of this revenue meta thesis is, the protocol must generate revenue. Second is that revenue must be passed back to the token. And then third is that, they can't have more expenses or inflation or unlocks going out more than, that second level of what they have coming in. Yeah. So, this is sort of the outperformance thesis that we're going on for this cycle, and Lighter is at the heart of this thesis. So
we appreciate Trevor, your support.
Absolutely, man. Thank you for coming on, and we'd love to catch up in a few more months. And we're going to turn some of the political answers into more tangible things that we can talk about. So no harm there, and really appreciate you coming on, man. Keep all the great work.
Thank you. It was a lot of fun. Thank you.
Absolutely.
See you soon.
See you next time.
See ya.
Thanks, Trevor. Very cool. I mean, these guys are absolutely crushing Lighter. And, these guys are at the heart of the perpetuals build out, which is one of the few sectors that we see that is just taking the world by storm as it pertains to fintech broadly. So we know tokenization, we know perps, prediction markets, vaults. These are the things at the heart, and stablecoins. These are the things at the heart of the build out. I'm seeing some rumblings about a Treasury Secretary Bessent press conference, and we've got about 30 minutes or so until our next guest. So I'd like to potentially do some screen share here. Hit me up in the chat, guys. Hit me up in the chat, because we've got a few minutes here. We're gonna cool it for a little while. We want to maybe see this latest Scott Bessent interview here. I think it was just an hour or so ago. Maybe it's on Twitter somewhere. I believe he was saying that we're going to be sanctioning some financial institutions, which the market seemed to not be particularly bullish. Let's see what we've got here. All right, so an hour ago, he's talking about Iran here, this press conference, the Economic Club of New York. The Economic Club of New York. I think we're going to try to bring this up on the stream, because this is what everyone's talking about today. So just give us a moment. Hit me up in the chat. What are you guys feeling? What do you think? Market, a little bit of pullback. I tend to think pullbacks are for buying these days. Yeah, here we go. Fox Business. Bessent announces major operation targeting Iran's economy. Let's go ahead and we're going to play this. Just give our producer a moment or two to pull this up. I think this is where we're going to see some things here. Get a little bit of an update from Scott Bessent. This guy seems to be the driving force in the market now. Obviously, you guys saw the Treasury announcement. This is the Secretary of Treasury talking about the buybacks program that he's doing on the long end of the curve. And we are going to see the press conference that he's talking about today. And so why don't we bring this up here, because I think this is the full interview. We'll just skip around a little bit. Producers getting it ready in the back. Let's put closed captions on there if we can. Yeah, Little Miss Gun, I see you there in the chat. I like Bessent too. I think the market's a little bit skittish about what he was saying in this conference here. So we're gonna cover it. So we're gonna bring it up in just a moment and get it going here for audio for you guys. Freedom Guy says he would comment, but he's paralyzed with euphoria. That is also how I have felt over the last couple of days. All right, so here we go. Let's get rid of the chat there on the right, Mr. Producer. We don't need that. We can go, yeah, let's go like that. And let's get some audio going. And we're going to listen to a little bit of this before our next guest is up in about 30 minutes. And let's get some audio, and then we'll skip ahead to when Bessent comes on stage. Yeah, there you go. So we'll skip ahead there. Yep. There he is walking on. Let's get some audio.
Good afternoon. Today, at President Trump's direction, the United States Treasury has begun Operation Economic Outcast, an unprecedented campaign against the Islamic Republic of Iran and its enablers. In the Second World War, D-Day marked the historic beginning of a campaign with our allies to target and drive the enemy from its positions, including those in third countries. Today, in that same spirit, we are launching an economic onslaught against Iran's financial connections around the globe. Our objective is to sever every economic lifeline that sustains this tyrannical regime until Tehran stands alone. Iran's fanatics devote themselves to death to America and seek nuclear weapons to do just that. They have murdered and maimed more of our citizens and service members than any other terrorist regime on earth. And they have been at war against America, their neighbors in the Gulf, and much of the world for 47 years. President Trump has taken action that his predecessors
Operation
have long
Economic
referred.
Outcast.
And under his leadership, America is no longer managing the Iranian threat. We are ending it. Our great armed forces have laid the groundwork for achieving the president's objective of preventing Iran from ever obtaining nuclear weapons. They have shown America's resolve to finally end this threat. And the strength of America's economy under President Trump allows us to wage this sustained financial operation alongside the might of our military. Iran now faces a very clear choice with only two paths before them: complete global isolation and a subsistence economy, or a path back to normalcy with an opportunity to rejoin the global economy. Today, we are launching Operation Economic Outcast to foreclose every other option available to the Iranian regime. Treasury has mapped every node, every facilitator, and every network that Iran has used to smuggle oil and evade sanctions. Beginning today, the actions of Treasury and other agencies will tighten the noose and block every potential source of revenue that funds the IRGC and the evil Iranian regime. We are enforcing a zero leakage approach. There will be no minimal breathing space for the
Bitcoin holding
regime
up,
to
Bitcoin
rebuild
not,
its
though.
capacity to inflict terror against America and the world. The final refuge of this regime is a mistaken conclusion of nations that still finance the Iranian threat in the hopes of evading it. It is no longer acceptable to operate in the gray spaces of this conflict. Countries cannot claim they are blind to enabling this activity. Iran's enablers purchase, transport its petroleum. They facilitate the flow of its finances through exchange houses and free trade zones. They welcome Iran's flights and maintain registries on its behalf. They turn a blind eye to seaborne fuel transfers and overland transits. They condone illicit use of their banks, all the while concealing the extent of their complicity. The president is making phone calls to world leaders with specific requests to cease their interactions with the regime. We are already seeing results. Over the weekend, comments from Iranian leadership clearly acknowledged the effect of this campaign, and nations that facilitate any interactions with the regime should quickly heed our message. Those who stand with the United States will reap the rewards of our partnership. Those who tether themselves to the
Good question, Watcher.
Iranian regime should expect
We know
to
this is
share
going to hit
in the
Iran, but
isolation
Russia,
of
China,
a
who else is
withering
enabling
regime.
them?
Teams from Treasury, State, and the U.S. military are now meeting with their global counterparts to tell them that the United States expects action. Every country has a defined timeline to shut down activities we have identified. If they do not take action, we will do so unilaterally through Treasury authorities. For example, every branch of Bank Melee must be shuttered and dark. And let me be clear, any entity that facilitates money laundering on behalf of Iran will be removed from the US dollar system. The clock just started ticking. The new sectoral sanctions determinations issued today target 5 of Iran's most vital lifelines that it exploits in other countries: digital assets, technology, gold, aviation, and shipping. These measures broaden secondary sanctions risk for anyone foolish enough to continue conducting business with this regime, and will accelerate the speed with which we pursue them. As I speak, Treasury's Office of Foreign Assets Control is also sanctioning over 60 entities, individuals, and vessels around the world that enable the Iranian regime to procure illicit nuclear and missile technology, conduct cyber operations, and generate oil revenue. This is a sustained campaign to collapse every last option for Iran. Let there be no ambiguity as to the position of the United States. An economic engagement of any kind with this murderous regime will expose those responsible to the full reach of American power. For decades, this regime has drawn strength from a calculus
Iran
that
is starting
regards
to respond.
Iranian retaliation as certain.
Iran Major
and
General
American
says America
enforcement
must
as
change its
negotiable.
behavior and take practical
Under
steps to
President
implement
Trump,
the terms of the
that era
Memorandum
is
of
over.
Understanding.
To the ordinary soldiers supporting this regime, as more and more of your paychecks stop or are supposedly just delayed, ask whether your commanders are leading your country to triumph or to ruin. And recall that the Berlin Wall fell when ordinary soldiers decided not to shoot at their own people. And to those who enable Tehran, do not discount the cost of testing Washington's resolve. No nation should expect to enjoy the rewards of our system while helping those who seek to destroy it. It is now a time for world leaders to make a decision between prosperity and isolation, peace and terror, America and Iran. The campaign we begin today will gather force with every day that follows, and it will not end until this regime stands alone. With that, I welcome your questions.
Obviously, the question is, what is the
Reuters.
economic impact of this? We already know his
Thanks, Secretary.
attempts
One
to
of the
settle the bond
most powerful
market.
tools you have at your disposal is the ability to impose secondary sanctions on banks and financial institutions that facilitate transactions for Iran. Chinese banks have often been talked about being targeted, but we don't see any of those institutions targeted here. Is that something that is coming in this campaign, or is the very delicate trade truce with China something that could prohibit you from going that far and taking that very big step?
We want to make clear here today that no one is above the reach of U.S. sanctions. That if they facilitate transactions and are part of the ecosystem that turns Iranian oil into money, into repression, they will be targeted. We find that the best way to engage with countries is through quiet diplomacy, and we are level setting with every country to tell them our expectations. We know who they are, they know who they are, so when the hammer of U.S. Treasury actions falls upon them, they will have no one to blame but themselves. So, Richard from CBS.
Thank you, sir. Thank you. You said the president is calling world leaders with specific asks and that there is a defined timeline. Who is he calling and what are the asks?
We're not going to name names. That we've already seen some results, and that I am confident the president, as you all know, is quite persuasive, and we are following his calls up with calls from visits and calls from the State Department and from the U.S. Treasury, expecting them or telling the
guys,
leaders.
There's a lot of
countries,
different angles
and
here
the
to take
entities
politically,
exactly
but if
what
we're
we
just looking
expect
economically
and
at what this could mean on
and
the
I would
market,
expect that very quickly, if they do
if
not
we're just
respond,
kind of weighing,
then you will see
these two things
the
that we have
ramifications of their
right in
actions.
front of us, the sanctions are going to stop some liquidity. They're already using tariffs, right? This is going to slow economic factors down. But then on the other hand, We know that Bessent is trying to do everything that he can to lower yields, do so both on the long run as well as in the short run. And this is going to speed the economy up. And I think that's a much stronger force than the economic sanctions that he's describing here today.
Chinese banks and shipping firms if they do not comply. And then secondly, as you look to take these unprecedented sanctions, you've also said that as the Iran conflict fades and oil prices recede, that will help bring down long-term bond yields. In the meantime, you have mentioned your toolkit, and I'm curious if you are looking at reducing auction sizes for longer-term dated Treasury debt going forward, and what other actions you may consider from that toolkit.
Now, this is a great question.
Why don't we work backwards? We issued the quarterly refunding announcement 2.5 weeks ago. We are going to continue with our regular program of auctions. So you will be hearing from us again at the beginning of next quarter. In terms of, as I said, every country, every entity should know that they should be prepared to face U.S. sanctions. And no one is above this. We are going to hold everyone accountable, and this is economic asphyxiation of this regime. And Jennifer, as I said, no one should test our resolve. So, Josh from New York Post.
It sounds like the beginning of next quarter, they might lower their auction sizes.
You said you weren't going to name names, but there's been some reports that the United Arab Emirates is among some of the first nations to take seriously these words from the United States to cut off all business interactions with Iran. Is UAE leading the way in this respect?
I would think that the actions that they took last week were not coincident, but likely causal. And I would expect that we would see a broad array of countries taking similar actions as we continue our engagement. The UAE have been very good partners and have taken the brunt of the Iranian attacks in the Gulf. And what have these countries gotten over the years from appeasing Iran? They were subject to violent attacks. While we were bombing Iran, they were bombing them. So it shows that with this regime, appeasement does not work. And on the other side, with this regime, trying to buy appeasement will no longer work in the eyes of the United States of America. So
obviously this is all about inflation.
And I want to emphasize,
they're trying to
spreading out across the
choke
world
Iran
as we speak,
into bending the
knee. You will see a
because
wave
it'll
of
lower
sanctions
inflation in the U.S.
when you leave this meeting today. And
because
you
if there's
expect
free-flowing oil through the Strait of Hormuz,
and I would expect
oil prices
that you
come
will
down,
see
inflation
a
comes
major
down.
announcement of a financial institution being sanctioned
And that helps
by
Bessent's
the end of this week. So, Samira from Sky.
Well, he just said that they're going to sanction a major, not U.S., but a major financial institution by the end of this week. So there's going to be more news on this.
No, are you?
And this is obviously a negative force on the market,
Sky.
but at the same time, you have plenty of positive force on the market as well. And so this is probably going to cause a dip. But
Does
look,
the United States and President Trump still want Canada to
this
become
train
a state?
has
He did say
changed
that
course.
they're getting all the
You
benefits
can slow
of
it
being a
down, but
state
you can't
without
stop it.
Being one.
I think he would like Canada to come to the table and negotiate in good faith. They were offered quite a good deal last week. They chose to reject it. Unfortunately, Prime Minister Carney rose to power on an anti-American, anti-Trump platform. I believe he was more than 20 points behind, and he seems to have gone back to his old playbook. And I think one has to ask oneself, is he trying to benefit himself, the Liberal Party, or the Canadian people? Because they were offered a very good job. So, yep, you.
Thank you. Secretary Bessent. If I could shift to bond yields quickly. We saw them tick down today after some turbulence and going up last week. Can you tell us if there's any possibility that there will be more bond buybacks anytime soon?
Again, we haven't bought a single bond yet. The next time we have an operation is September 9th. So we will see on September 9th. All right. One more. Let's see.
Oh, all right. So
you in the front.
Up until now, it's all been signaling.
You described this as an
They haven't
economic
bought a single
D-Day,
bond,
but
like you-
D-Day
like you
wasn't a
said.
threat of an invasion, and the U.S. didn't give a timeline to Germany. So why not impose the sanctions today?
Well, we are giving everyone the opportunity to remedy bad behavior. Why would I want to blow up the global financial system? We believe that it is important to level set and give people a cure period, but they should know that that will move very quickly and that we are serious. Secondary sanctions are a very powerful tool, and we here at Treasury, this is Gene Lang, the acting Undersecretary for Terrorism Finance, and in the Terrorism Finance Department and at OFAC, the reason we are able to use secondary sanctions is because we do not take their use lightly. So we believe that a warning shot and a level set of expectations is appropriate. And if people do not want to meet our expectations, then we expect, and they should expect, that they will leave the dollar system. Okay, thank you all.
Well, there you have it. Leo, let's go solo. Next guest is getting ready in the back. Wow. Okay. So there you have it. I mean, the pieces on the board are starting to fall into place. You know, you can really see how this is shaping up. How, on one hand, let's start in general. In general, the U.S. is doing everything it can to bring inflation under control. And if they can do that and control the narrative, meaning inflation comes down, national debt isn't spiraling out of control, then it's greater justification that their argument around the national debt and the economic situation of the U.S., that they can grow their way out of this, is more likely if they can keep inflation low, because ultimately they need GDP to outpace inflation in order to make a dent in that national debt. And so if you can run GDP at 6, 7, 8, 9%, and inflation can be a little bit higher if you're running, GDP that high, because, the difference is still positive. So you can run inflation at, 4 or 5% if GDP is 6, 7, 8. Even better if you can get inflation down, but ultimately you need GDP higher than inflation. That's where we're at. And so to help this, what we can do is we can bring yields down, both in the long run and in the short run. But these are the two, this is the push and the pull of the market right now. They're going to do everything they can to bring inflation down. That is deflationary pressures. Okay. Deflationary pressures also are going to bring the market down. And so you can't pump liquidity into the market at the same time as lowering inflation. You can do both at the same time, and you can hope that the liquidity injections are going to lead to a greater GDP than inflation increase. That's what they're hoping for. But it's a very, very prickly situation because, liquidity injections are also going to increase inflation. So that's kind of what we're faced with, right? They have these operations, but they need to do two different things in order to justify their goals. And so they're walking the tightrope, and they're choosing to run the economy hot on one side, right? So that they can bring yields down and they can increase GDP and productivity and continue the AI build out, because it is a massive capital driver, and that is boosting everyone's assets, boosting the economy. And if they can continue these buybacks, continue these liquidity injections, bring down the yields, steepen the curve, they'll keep the bull market going. And that's all kind of working in our favor as digital asset owners. On the other hand, right, these sanctions are deflationary, right? They restrict the movement of capital and they slow the economy down. And so on one hand, you have, the sanctions on Iran slowing the economy down to try to limit inflation and deflate the economy. But then on the other hand, you need to try to inflate this debt away, inflate credit in order to, inject more liquidity and boost productivity and grow your way out of the national debt. And so this is kind of the situation that we're forced with. On one side, you have a push. On the other side, you have a pull. These are two competing forces. Look, I'm here to say that the stronger force is going to win, right? You have two competing forces. One is going to bulldoze the other. And it's up to you guys to decide which one is stronger, right? On one hand, you have fiscal policy and political, sanctions. On the other hand, you have pure, raw economic energy. I think I know which side I'm betting on. And if you miss the run up, if you're looking at these dips, this is kind of what we're faced with now. And I'll just tell you what I'm going to be doing, and that's buying dips, because like I said, the trend has changed. We're no longer in apathetic, volatile market conditions. Obviously, if we can surpass some critical levels in the Bitcoin market, that is going to do wonders for the entire altcoin complex as a whole. And I'll tell you, Bitcoin's holding up. It's still upwards of 78. Even on the last hour, we haven't really seen the market react too negatively. And so this is kind of what we're keeping an eye on. And it's up to you to decide whether or not, these dips are for buying, or you think we've got one more move lower. But this is where we're at. This is where we're at. Okay, we are going to bring our guest up in just a moment. Before we do, we're going to update the headline here. Because Franklin Templeton, the CIO of Franklin Templeton Digital Assets, is coming in. And we're going to bring him up in just a moment. Seth is the CIO at Franklin Templeton Digital Assets. We know Franklin Templeton well because these guys have been absolutely crushing in the RWA space, tokenized funds, these sorts of things. One of the leaders, one of the pioneers. And so we've, talked about a lot of these funds. We've had Sandy on the show. She's great anytime we have her on. Franklin Templeton also acquired 250 Digital. So we're going to be talking about that a little bit. This launch gives Franklin's $1.7 trillion distribution network a dedicated active management crypto arm at a moment when Guinness has called out for a real disconnect between price and fundamentals. And so we're going to be getting into this disconnect. It feels like the market is re-rating the fundamentals a little bit. There's a very funny tweet that went out last week. Our friends at CMS, they said, you can literally feel the technology getting better as we speak, which is very, very funny that the market is now re-rating itself based on the technology that's always been here. But nevertheless, let's go ahead and bring up Seth. I think I see him there. He's ready in the back. I believe it's his first time on the show. There he is.
It is.
Seth, welcome.
Robbie, thanks for having me.
Absolutely. It's a pleasure. Thanks for coming on. How are you doing? We're calling this the pre-bull phase of the market. How is it treating you?
Doing a lot better today than 2 weeks ago.
Yeah, right there with you, man. I'm right there with you. This thing has reversed course fast over the last few days. Obviously, you can attribute this to a variety of different things. Probably most significantly is this, liquidity buyback program from the Treasury. We actually just watched Bessent give this press conference on sanctions in Iran. Before we dig into everything that you've got going on at Franklin Templeton Digital Assets, which, is a lot, I'd love just your read. Where are we? 4-year cycle is true or false? Fake news or real news? What are you watching? What kind of catalysts are you expecting here over the coming, weeks to months?
You know, it's interesting. If you had asked me that mid-year last year, I would have said 4-year cycle behind us, not something to pay attention to, and I was totally wrong on that. It's interesting though, if you look at what Bitcoin whales do, you actually saw whales selling into what would have been the end of the 4-year cycle, so October of last year. And you started to see whale buying over the last few months. So from like June, July. So I'd say, look, timing wise, the 4-year cycle definitely has come into the mix here. And from a whale engagement perspective, also seeing the 4-year cycle in the mix. Now, does that mean we have to wait until October, which would be when the 4-year cycle would tell us that we're ready to lift off? No, I mean, look, like you've had whale buying, as I noted, for a few months now, and now you've gotten a real catalyst. And there are a bunch of things that we should talk about here, but one of the ones that I really focus on is Bitcoin versus gold. And that was just down only from like August of last year until the start of the Iran war. Just down only. And it's odd because normally you don't see Bitcoin and gold decouple to that extent. And what you see if you zoom out is Bitcoin versus gold on this really nice up and to the right over the long run. Well, the start of the war kind of kicked off a bottoming process in that ratio. And we can talk about some of the reasons why, because we got some really interesting color on the ground about what was happening there. Yep. We bounced a few times on a nice like upward regression floor. But now we're actually seeing with this move tied to liquidity, with this move tied to Bessent and the Treasury buybacks, you've seen a really nice breakout moment in Bitcoin versus gold over the 200-day moving average for the first time in a year, which is pretty remarkable.
Yeah, and I think you're pointing to some of the relative strength metrics that we like to watch on the show as well, because these are ultimately where we're going to learn about outperformance. And for so long, it's been about capital preservation, but now going forward, we've got what looks to be market conditions where we can start to think about outperformance as we get into, potentially a more, accommodative monetary policy regime. And so as you're looking at, Bitcoin to gold, we're looking at crypto to equities, these things seem to have reversed course. And one of the things we covered last week was that as a result of Bessent making this, liquidity announcement as a result of the Treasury, he's buying up the long end, trying to, help out the yields and then selling on the short end. It's creating this bull steepening, which in theory, they're going to try to run the economy hot here. Do you think that this is cause to believe that this will create a regime in which scarce assets, Bitcoin and gold, will outperform equities? And if so, of those scarce assets, Bitcoin and gold, which one do you think will outperform and why? Maybe we can get into some of the specifics that you had mentioned there.
Yeah, when you look at what Treasury is effectively doing, and by the way, today he came out and said we haven't started yet, and I think that's why you're seeing a little weakness in the market. And I think they said they're starting in early September. So again, a little bit of an air pocket between here and there. But what they're doing is fundamentally driving real yields lower. It's fundamentally providing liquidity into the market. You're seeing gold respond to that. So gold is up nicely from its roughly $4,000 trough. And as I noted, Bitcoin versus gold up very nicely as well. So Bitcoin outperforming gold in this move higher. When I think about what the longer term trend there is, look, Bitcoin has a component of it that is tied to real yields, the same thing that drives gold. But then Bitcoin has a component that's tied to network effects. It has a component that's tied to being this new tech asset. And there's a really interesting additional fact, which is when gold's price goes up, more supply of gold comes to the market. So gold's price goes up, gold miners start producing more, and you get that supply response. In Bitcoin, it's actually the opposite. So people think of it as Bitcoin as fixed supply, But in reality, we haven't mined all of the Bitcoin that's going to be mined. But if you're a miner, your operating expenses are denominated in dollars or your local currency. So as Bitcoin goes up in price, you have to sell less Bitcoin in order to cover your operating expenses. So there's actually this really cool dynamic where Bitcoin has less supply programmatically come on the market when its price moves higher, in contrast to gold, which has more supply. So I'd make the bet that when you zoom out, you're going to continue to see Bitcoin versus gold going up and to the right. So I'd bet through this cycle, through this liquidity provisioning easing cycle, you're going to see Bitcoin outperform gold, but I think they both likely do well.
Yeah, I tend to agree with you, and I think they tend to both outperform equities if we do get this bull steepening of the yield curve. And so on the show, we've been developing this thesis as we've sort of transitioned, from a bear into this pre-bull phase that we're calling it, and then eventually into, some of the market conditions that we can remember so fondly. And we're thinking about outperformance, and we've kind of talked about this as a barbell approach. We've arrived at this barbell approach, and on one hand, we've got this small group of digital assets that have a monetary premium, and this is almost only 2 or 3. You can make a case for a third one. We feel like Bitcoin, Zcash have true monetary premium, and you could make an argument for Ethereum belonging in that group as well. And we feel like as a result of the scarce asset thesis and the scarce asset outperformance that we just talked about, we believe this basket is poised to do incredibly well because of some of the supply dynamics as you talked about. Zcash AI surveillance is coming, a little bit more increasingly so and accelerating. So we have a thesis around these things. On the other side of the barbell, as an individual investor, we've arrived at this revenue meta, this group of companies and tokens that sort of have this 3-pronged thesis that we think make them a viable investment. And ultimately, I want to get your thoughts on this as well. But the 3 prongs are sort of levels in which, first and foremost, in order to have this viable thesis, protocol or company needs to have revenue, needs to have product market fit, needs to be generating some revenue. Second level here is that revenue needs to be flowing into an asset that is available to the public, whether that be a token or security that's available or public, cannot be going into some venture invested, private labs corporation. Third is that, if you can get the first 2, get product market fit and revenue, and you can get that revenue flowing into the token, you can't have more outflows, more emissions or unlocks or incentive programs flowing out than the revenue that you have flowing into the token. And so my question here that I'm getting to is, this is kind of the thesis that we've arrived at, for myself as an individual investor, one that we're describing as a potential to outperform baseline digital assets, as we enter these market conditions. You're CIO of, Franklin Templeton Digital Assets. How does this thesis reconcile with the strategies that you're deploying? Given that this could work for an individual investor, does it also work at the institutional level? What makes sense and is cross-compatible with what you're seeing on the ground with Franklin Templeton?
So that is very much in line with the way that we're thinking about valuing tokens. So it's really a fundamental approach. In my background, I did public equities investing for 18 years, and what you just described is really similar to public equities investing. But there's one thing that I would add to that, which is you need transparency into the P&L. So there's a big debate, and the P&L meaning that the profit and loss rate statement, which really what you need to understand is revenue and expenses. And the way I describe it is, there's a sense that the optimal setup is that all of your revenue or a very large percentage of your revenue goes to buybacks. That's obviously what Hyperliquid is doing. And that's what the market is using as kind of the proxy for the right way to do it. I'd push back on that a little bit. Every business has a different margin structure, and that doesn't mean that one business is inherently better than another. Obviously, in a vacuum, you love very high margin businesses, but you can come up with the right valuation metrics for a lower margin business. Businesses have different CapEx requirements. So you've had this build out of financial statements in the traditional investing world. And I think it's really important that we start to move there in crypto, because when I talk to teams, a lot of times they're like, hey, listen, we have great product market fit. Our revenue is growing at a nice clip, but we have a lot of very interesting growth investments we'd like to make. So why do we need to why do we need to put all of our revenue into a buyback of tokens? Yeah. And I fully understand that point of view. If you look at Amazon, if you look at Tesla, Netflix, they all had big periods of investment or expensing, spending before they got to profitability. But they also had transparency around that. They had quarterly calls where they were saying exactly what they were going to spend on those initiatives. They were laying out how those initiatives were high ROI, high return on investment, and frankly, why they were higher ROI than buying back their equity at that time. So I think the last element to everything you laid out, like product market fit and revenue growth, super important. Flowing to the assets, super important. And not having emissions overwhelm the buyback, super important. But transparency around what we're actually getting, whether we're getting 100% payout ratio. In some cases, we might be getting a 200 or 300% payout ratio, meaning we're getting subsidized by a venture raise, and we don't even know that if we don't have transparency around that. So that transparency element, super important.
Yeah, absolutely. And I think the transparency can also speak to the durability of the revenue, the buybacks, the value accrual to the asset. And I was having this debate with my co-host who isn't available today, but we were, he was kind of making the case for buybacks. And ultimately the conclusion that I draw was, well, if you aren't doing buybacks on your token, that's okay because there are growth investments as you laid out, but you probably shouldn't have a token. You probably launched your token too early. What do you think this is the case, or do you think it's okay to have a token out there circulating as a mechanism to get exposure to a company, but it's okay not to have that revenue and instead put it into growth, and that token can still exist? What do you have?
I'm fine with that. I'm fine with that. I mean, look, when I was investing at Jennison Associates, we were growth investors, very growth oriented. So the growthiest of growth. There weren't that many large institutional investors that were in Tesla back in 11 and 12. Yeah. So you had to be able to imagine what things would look like in 5 years and then discount back from there. And I think like a lot of crypto investing over the last decade has been imagining what the future would look like. And I get it. A lot of people are saying, great, well, now's the time to deliver because we have an administration that lets us deliver value to the token. Mm-hmm. But I think there are going to be situations where investing is the right path to take. And I would rather have that token investable today, even if they're not driving value back to the token. It's kind of like the question of, everyone talks about wanting to have startups more accessible to the broader public, right? You can only get SpaceX when it does an IPO at almost $2 trillion, right? Yeah. Wouldn't it have been great for non-accredited investors to be able to get exposure to SpaceX earlier? Well, what we have in crypto is the ability to get exposure at a really early stage, but now we're saying, well, but you have to be dividending back or using all of your revenue for a buyback or a large percentage. So that to me, it's quite analogous to the debate that we're seeing in the equities world, and I'm all for early access, broad access, but you need to know what you're buying. You need to know what the P&L looks like, what the growth prospects look like, and what the payout is likely to be over time, because what you're basically doing is you model out where you think revenue is going to go over a 5-year period, right? You say, all right, I think margins are going to be at this level. And then you come up with a multiple that you want to put on those earnings. That gives you a price target 5 years out or 4 years out. And then you discount that back to today, and that gives you your fair value today. So you need some level of transparency to understand when what you're seeing in the top line translates into a buyback or a dividend or a staking yield or something like that.
That makes complete sense, thinking about projections and discounting it back to present value. I have an inkling that what I'm about to say is the wrong way to think about this, but I'd love your critique as to why this is wrong. Given, we've got this analysis, let's say we're doing an analysis of this token over the next 5 years. We understand there's a couple of, very lucrative growth investments that are available to it today. We expect those to start to, reaping those rewards maybe 2-3 years from now. And that's when, we might see more value accrual as a result of those growth investments paying off now. Why is it wrong to think I'll just buy that token 2 or 3 years from now when, we start reaping those rewards? Why is that the wrong way to think about it?
It's interesting. Markets tend to be pretty efficient at pricing in what's visible today. So if the market can see that there's this opportunity 2 or 3 years out, and if it thinks that it's highly likely, think about it this way: the more likely the market thinks that outcome is in 2 years, the lower the discount rate it's going to assign to that outcome. And you're going to start seeing that priced in the near term. So it's kind of the way to think about it is, let's say the market thinks that outcome is really unlikely in 2 years. It might be pricing it at 100% required return, meaning for each of those 2 years, the market wants to see 100% return in order to justify the risk of that outcome. So think of it as trading at 25 cents when you think it's going to be $1 in 2 years. But as you get data points that say, hey, they just got CFTC approval to come onshore, and they just announced this big business development relationship, what happens is that required return comes down, that discount rate comes down, and it might go down. It might go down too far, right? It might go down to 20%. But at a 20% required return, you've more than doubled the stock to today, right? The fair value today has more than doubled because you're only requiring a 20% compound return to get to that dollar price target. So the market will adjust in real time based on the information that it has, even if you're still 2 years out from getting that cash flow.
And you talked about transparency, and I think that is an extremely significant part of what you're talking about here, because more transparency is going to give us more of those data points. It's going to let us have more insight into the future of how certain or uncertain it is that this outcome is likely or not. And so what are some of the tools through which you've seen projects be more transparent? We've had, we've been running this show for, several years now, several people that work in the industry, they come on, they watch, they learn from other founders that are employing some of these tools. And so are there tools out there available to founders in which they can use and leverage to provide the market with greater transparency? What are some of the tools that you found the most helpful for this case?
For sure. I'd say transparency starts with having your business on chain. So there are a lot of businesses where the actual revenue accrual is not on chain, and that makes it harder to analyze the business. Now, there are a lot of reasons why businesses will do that for a period of time. It's like launching a startup in stealth, right? So we're okay with that. But that's a really nice first step as you're moving down the path of transparency, putting your actual top line online or on chain. When you start to get into expenses, oftentimes the expense stack, and you want to look at both direct expenses as well as incentivization. Those oftentimes require some reconciliation with offline accounts. So that's what the foundation, or in cases where there's an equity entity, that's what they have to sell tokens to pay out. And it's good to know what that expense base is. And by the way, it's good to be able to comp that against other similar businesses to see whether you think they're running the business efficiently. So another great reason to have broader transparency. I'd say beyond that, having regular investor relations calls open to the community, those are great. We've seen a lot of teams start doing those on a regular basis. Now, sometimes I get the feedback, well, we started doing that and it didn't help our token price. Well, that's okay. Maybe there's something that you're not sharing yet. Maybe there are aspects of your business that people are waiting to turn around before they engage. So just the fact that you're doing the call and the token isn't working is not a reason to either stop doing the calls or decide to not do a call in the first place. I think the more visibility, the more transparency, the more questions from the retail and institutional investor community you can answer, the better. And then I'd say documentation. So very clear documentation, very clear and consistent statements around your long-term mission, values, approach to economic sharing. And in general, we take a view that we'd very much like to see equity and token consolidated. So we're token investors. Equities have a lot more rights, formalized rights, than tokens. There's certain circumstances, again, where it's advantageous to keep them separate and communicate that. We're comfortable in some cases when there's communication around that. But in general, when you have equity and token, it's really hard to know how the team is incentivized between those instruments, where future businesses are going to. You might feel really comfortable with a setup that you have today, and then the team ends up launching a bunch of new businesses that they're focused on that don't accrue value to the token, and you could become a lot less comfortable with that dynamic over time, and the market will derate the token. So transparency can come in a lot of ways. What I'd say is we're very much there's a term, material non-public information. It's very important in the equities world, and it's also very important in the crypto and token world. So what we ask for teams is when they are disclosing information, they do it on broad-based calls, they publish it in blogs, or they do it when they're doing broader community updates, so that no one is getting preferential information. And we take that very seriously. We get on every call saying we want to make sure that we don't receive MMPI. So as we talk about transparency, the other side of that is we want to make sure that that transparency is always broadly disseminated.
Yeah.
If it's material.
Absolutely. Right. Absolutely. And this is standard practice in the equities world, like you said. And I think the digital assets world is coming around to this. We're seeing more transparency frameworks, more of those investor relations calls, as you mentioned. And so this is, it's kind of this growing up moment. It's this maturity of the industry, and it's encouraging and reassuring to see several of the companies in the space taking this very seriously. We think this is part of what is legitimizing the industry. And this is something we talked about at length last week as we saw, industry leaders up with President Trump, with the CFTC Innovation Advisory Committee. There are certain companies that are in a position to be primary benefactors of the legitimization of the industry, perpetuals coming into the US. There are certain narratives or sectors that we think are really poised for success as some of these things continue to develop. another one of them being the tokenization build out, which we're seeing right before our eyes. This is another part of the thesis. Tokenization super cycle. We're seeing equities and tokenized funds. These are hundreds of trillions of dollars that are entering the on-chain economy. And ultimately, we anticipate will flow into DeFi protocols, greater TVLs, greater AUMs, ultimately more activity, more fees, more earnings, more potential value accrual for all of those DeFi protocols as asset classes become tokenized. And so, I'm curious if there's sectors that you think will outperform. We've talked at length about stable coins, as it seems like, the Treasury is going to rely on buyers of these short-term treasuries. Stable coins, vaults, perpetuals is a big one. And generally the legitimization of the industry. We think perpetuals is, a benefactor of this. What are some of the sectors, the categories that you think are poised for outperformance as we transition into this accommodative monetary policy?
Yeah, so I'll say two things. One is I think market infrastructure and payments are two key areas that are going to benefit. I think those are layups, and beyond that, I think we're going to see more and more applications where to analyze what's going on with that business for that token, you're going to have to know more about the end market, whether it's healthcare or consumer, than you will about the deep elements of their crypto infrastructure. So I think it's going to be value add to be very familiar with the history of the development of the crypto infrastructure, the choices they've made. But I think we're going to get to a world where you're looking at a healthcare business, a consumer business, an AI business that happens to be on crypto rails. But that leads into the second component, which is, there's this term that the VCs like to use a lot, which is skeuomorphic and non-skeuomorphic, right? Mm-hmm. So skeuomorphic is, well, we're going to have things that just look like equities today, right? But they'll be 24/7. They'll trade on crypto rails. We're just swapping out legacy infrastructure for crypto. Non-skeuomorphic is usually the stuff that's unexpected. So it's when you put equities on crypto rails 24/7, you just get an explosion of new stuff going on, new ways of using equities, of incorporating them into business models and disaggregating them. And I think the non-skeuomorphic uses of equities and other real-world assets are going to be mind-blowing. I think they're going to be much bigger than the just like, oh, we're taking NVIDIA stock and putting it onto 24/7 rails. And a lot of those things, like we have tons of ideas around what that will look like, but a lot of those things are going to be unexpected and they're going to come from really innovative teams.
Yeah. Incredible. That is something that we are excited about over here on the show as well, because the ingenuity and the creativity of this industry, it's unparalleled. And we've seen it before. We've seen how one mathematical innovation, call it, XY equals K in the decentralized exchange space, can lead to the explosion of tokens on chain, where the AMM ultimately enables the liquidity provisioning of a permissionless set of assets. And allows things that had previously very high barriers of entry to now all of a sudden there is no barrier, and there's so much competition and there's so much experimentation in a market segment. So we're very, very excited for this. I totally agree on tokenized equities. I think this is going to be huge. There's been announcements today. Coinbase, is tokenizing equities, and I think swap, earn, build is all part of this. And we're already seeing people come in and start to build on top of this new entrance into the tokenized equities market. Seth, I think we're just about at time, but I could have kept this going for quite a while. I'd love just to give you the last word on what Franklin Templeton Digital Assets is up to, anything that you'd like to share, and where people can find you to learn more.
Thanks, Robbie. We're really excited about what the future holds. I think it's really important to recognize that Franklin made a big investment in building the digital asset business in the downturn. And we We think the next few years are going to show that that was the right investment. And again, this is Jenny Johnson, Sandy Call, the whole team that we have here showed high conviction through the downturn. And I think we're ready to start seeing that pay off. And obviously, a lot of the announcements that we've had over the last few weeks and months point in the direction of starting to really build that momentum. We think 26 is going to go down as the year where traditional finance and crypto saw that convergence come together. So really excited to be on here, Robbie. Thanks for having me.
Absolutely. Thank you so much. We believe in the convergence as well. And we appreciate you stewarding the traditional finance side of that world and ultimately seeing these worlds collide. So thank you so much. Would love to have you on again soon, Seth.
For sure. Thank you.
Very cool. All right. We'll see you soon. Thank you so much. That's been Seth of Franklin Templeton Digital Assets. Great segment. Love to get broad and have some of these broad swath conversations so that we can understand how some of these sectors and categories interconnect with one another, build broad investment theses, and ultimately understand the space from a high level. So very, very cool. We're going to bring up our next guest from Paragon, and we're going to keep this show moving along. Hope you guys are having fun out there. I see everyone cranking in the chat. Little Miss Gunn, great convo. Good to have you here. It was a guy from FT that got me into crypto. Yeah, Franklin Templeton's been in the game a long time, doing incredibly well. And like I said there at the end, just pioneering the traditional side of this world. And ultimately, these two worlds are colliding. The decentralized finance, the traditional finance. Ultimately, this is just fintech. And fintech upgrades the financial system. And this is what we're seeing in real time. And so big shout out to the Franklin Templeton guys for doing exactly that. Because this is, and it does feel like this is the year where it's not necessarily reflected in asset prices, but ultimately it is happening. The convergence here between TradFi and DeFi, everything is coming on chain. This is the tokenization super cycle. And we're integrating these two worlds and upgrading the financial system. And we're doing it all with you guys here. And so keep all the comments and the questions in the chat coming. We're going to bring up our next guest, Taha, the founder of Paragon. And I'll tell you guys a little bit about Paragon while we get Taha up on the stage. Taha founded Paragon. Paragon's a HIP-3 market deployer on Hyperliquid, turns crypto narratives, macro benchmarks, and even pre-IPO equities into tradable perpetual futures. And so this is sort of a developing story as there's more competition in the HIP-3 deployer space. Obviously, you guys are familiar with Hyperliquid's success. Tons of volume, volatility is returning, so revenues through the roof. A little bit of a pullback on Bessent's press conference today, but you guys know what to do with dips these days. Paragon's Unitree pre-IPO had priced the robot maker near a $38 billion valuation, roughly 4 times its $9 billion Shanghai IPO price. And when Unitree actually opened this week, the stock surged even past that mark. And so we think that this is a massive, massive opportunity. This is why we see so much appreciation and adoption of the Perps space in general. And deployers are a very, very crucial part of this ecosystem. So let's go ahead and bring up Taha of Paragon. We're going to talk a little bit about Unitree, the pre-IPO market, and everything that Paragon's doing in the Hyperliquid ecosystem. There he is. Taha, welcome to the show. Welcome.
Hey, thanks for having me back.
Absolutely. Thanks for being here. Maybe you could just catch us up on everything that has taken place since your last appearance on the show. We were talking a little bit more about the HIP-3 ecosystem. There's been calls for Hyperliquid to acquire something like a Gemini for regulated HIP-3 deployment. Let's get into the HIP-3 market deployment space. I mean, this is like very, very hot topic stuff. And so let's start with your experience as a HIP-3 market deployer, but I also want to get into what has transpired since your last time on the show.
Yeah, for us, we started with crypto native indices, but multi-asset was always the vision. So, recently we've made a push into some single name equities, like you mentioned, pre-IPO with Unitree. And I think what's actually really topical is, we've registered Ansem, which is a crypto perp, as well as the 10-year, the 30-year, and the 2-year, Treasury benchmarks. So that's really what we're building Paragon for. We want it to be for whatever is front of mind for traders, and very much asset agnostic. And yeah, I think like what's changed since the last time we spoke. I mean, obviously, there's been some movement on the regulatory clarity front, but for us, we've really just changed the speed with which we're looking to respond to the market and what traders want. And the feedback has been lately, the AI and the resulting bottleneck trade has been extremely interesting. International equities, pre-IPOs, and now, bringing the rates trade and the long bond onto Hyperliquid.
Yeah. And obviously, I mean, the bond market is more volatile now than it's been in recent times. And so maybe you can just talk to us about the reasoning and the rationale behind bringing the 30-year on. How big do you think the Hyperliquid bond market can get, or the on-chain bond perpetuals market? Obviously, this is one of the largest asset classes in existence, but what is the opportunity as we bring that on-chain?
Yeah, I think it's consistent with, this messaging and this vision for the House of All Finance. We don't think that perps, are only suitable for what look like blow-off only equities. And we see this as an awesome opportunity to onboard a totally new cohort of traders. And as you mentioned, it's one of the biggest markets in the world to Hyperliquid. I think there's some opportunities to use these rails to simplify the trading experience, maybe bring someone to rates who has never used it before. So for instance, like our products, you're really just betting long or short on the yield going up or down. And it removes the idea of like duration, right? Which really trips up a lot of folks unless you're pretty fluent in bond math. So yeah, we see it as an awesome opportunity, just like the IPOs, the pre-IPO perps, to kind of introduce people to Hyperliquid, and the idea of non-custodial exchanges being as performant as their centralized alternatives.
Maybe, I mean, just because the bond market has been in the news, so much over recent days, maybe you can just explain, the concept of duration and how a bond perpetual removes that factor from the equation.
Yeah. So the idea is, with a movement from 1% or 2% or 5% to 7%, you're going to see the same effect on your notional amount on a perp, because a perp's payoff is linear, whereas a bond has some convexity to it, right? So as you're moving out the curve, you always hear people talking about, moving out the curve in the bond world. The math isn't exactly like 1-to-1, right? But we really simplify that with the introduction of a yield perp, where you're just speculating long or short, and you don't have to deal with the idea of tenors, right? And different QSIPs and different bonds with different maturity dates.
Got it. Very cool. And so why do you think, maybe you could just talk a little bit more about being a HIP-3 deployer? We know that it takes significant capital to issue these tickers, and launch these markets, deploy these markets. Why do you think you guys were the first, right? This is obviously a massive asset class. I'd imagine that there's first mover advantage to deploying these assets. Why do you think no one had done this previously, and why were you guys the first to do it?
Yeah, I think like HIP-3 is just generally new as a whole, right? And we're talking about something that's less than a year old. And I think what HIP-3 has really done is open up the aperture of really what can be made into a perp. So we've seen the first step with equities and then pre-IPOs. So I think it's really just people opening their eyes a bit and realizing like, hey, we don't have to stick with the status quo when it comes to funding mechanics and how we think about some of the different parameters of a perp, which have previously only been used for pricing crypto assets. So the idea is like there's a pretty interesting primitive here, and you can kind of tweak it in various ways to map some of the fundamentals that exist, right, for the underlying asset in TradFi.
Okay, very cool. And so, obviously you guys started with, crypto indices. You went into some of the pre-IPO world given, this Unitree. equity and, also with the bond market listings now as well. Is there a sector that you anticipate is going to be particularly profitable for deployers, whether it be the bond market or pre-IPOs or crypto? Where do you think that there's still a gap that you guys can start to take and capitalize?
Yeah, we're pretty hopeful that, these rates perps can validate this thesis of, bringing on net new traders to Hyperliquid and ideally a new asset class. As far as what we've planned, we tend to keep that pretty close to the chest. But I think really what we're trying to solve for is this idea of, as soon as something becomes front of mind, we want there to be a perp there ready for you to express a view on it. So just like with Bessent's statements and actions over the last, I guess it hasn't even been a full week yet. The idea is traders have this kind of muscle memory flow where they're going onto Hyperliquid whenever, a catalyst emerge or some sort of a news breaking event happens. And we just want to be positioned so that the asset already exists by the time that the trader actually goes and onto Hyperliquid's front end and looks for it. So for us, I don't think there's any specific asset. I think if we made ourselves beholden to an asset class or a trend, we would miss, kind of the next one. So we're constantly asking ourselves, where's the puck heading, and what do traders want to trade next?
Makes complete sense. And you're kind of chipping away at the house of all finance, laying it brick by brick so that you ultimately have this house ready to live in whenever there's someone that wants to come in and, stay in the house of finance. The bricks are already laid and the house is already built. And there's been this landscape has been created such that it has a thriving ecosystem. There's a very, healthy competition amongst deployers such as yourself. And ultimately Hyperliquid has, up to this point, decoupled itself from the responsibility of actually deploying these markets. There was some speculation about whether, Gemini or some other, company would make sense for Hyperliquid to go and acquire and kind of bring, and maybe you could actually help to articulate this argument, steelman it for us and tell us what you think. Hyperliquid going out and acquiring and deploying and bringing it into this verticalized stack. Is that kind of the core thesis of the argument? And why do you think this makes sense or maybe doesn't make sense?
I understand why people are asking the question, right? I think it comes down to what is the highest, the best use of the next dollar. And I can understand why you can make the case for M&A. I think what gives people trust, right, is the idea that you have this kind of 99% net income machine that is programmatically buying back its token, right? And that's very scheduled and you kind of know where those flows are coming from. I also think it's pretty consistent with the vision of, becoming this AWS or this liquidity layer, and really being the rails with which other people can build products and businesses on top of. I think you can probably do a bit of both, and perhaps an acquisition can kind of be ingested and made into a public good for everybody building on Hyperliquid and using Hyperliquid. So that seems like an avenue that, I'd be really interested in the community exploring. But I don't think it's necessary, right? I don't think it's like a hill that you have to die on. I think we're seeing plenty of progress so far with, builders and third parties like ourselves coming in and building products that folks are, very actively using on Hyperliquid.
Yeah. And you guys, as we talked about bond market, Unitree, you guys have found success as a HIP-3 deployer. I think we know that, Trade XYZ still, I think, has maybe 90% market share here. Do you think it's possible to close that gap? And what are you doing to close that gap and gain more market share in the HIP-3 deployer ecosystem?
Yeah, I've spoken about this before, but I really don't think that our strategy needs to be defined, in comparison to theirs. I think if you look at the ETF issuer landscape as a proxy for maybe how HIP-3 deployers will play out, it is concentrated within a few folks, but it is not a monopoly, right? It looks a bit, I guess, more like an oligopoly. So for us, it's just continuing to focus on being a good deployer. And I think that we're starting to get some appreciation for, our selection and our taste. I think increasingly that's what's going to differentiate deployers. You're starting to see Coinbase and put folks who are like much more plugged in with the market in charge of asset listings, like Kobe, for instance. Yeah. So I think like all else equal, right? Your taste and your selection, and basically arming your traders and investors with the toolkits for expressing the views that they want to when it matters most. That's what we're focusing on, and it's a bit of an art, a bit of a science, but we hope that that's coming through in the catalog that we're presenting.
Yeah, that makes complete sense, and I want to kind of pass an idea over to you, because I was chatting with a friend, and we were chatting about this market dynamic of HIP-3 deployers, because ultimately it could make sense, especially with all sort of the contentiousness of how aligned or not aligned some of these deployers are with the Hyperliquid token and ecosystem. The idea came up that maybe spot equities, spot tokenization and spot markets on Hyperliquid is an integral part of the house of all finance that is currently missing. And if there were a spot equities market, or just spot market in general on Hyperliquid that was more robust, it could provide a variety of different facets for someone to gain significant market share in the deployment ecosystem, be it, increased opportunities for hedging, increased liquidity options for market makers, increased venues for conducting a basis trade across multiple assets. Have you considered incorporating more spot markets into the deployment strategy? And how do you think that could round out, whether it's Paragons or any HIP-3 deployers offering?
Yeah, I think spot is extremely complementary, right? Like you mentioned, doing things like basis and carry trades. I think that makes a ton of sense. Yeah, I think the idea of creating complementary products within the DEX is super interesting. So, for example, being able to cross margin your 2-year perp with your 10-year perp, and doing the spread trade between those two, which is a very popular trade in TradFi. That would only exist, right, having those two products on the same HIP-3 DEX and having cross margining enabled. So we do see that as a differentiator. But I think primarily, right, the listing strategy serves as like the primary onboarding mechanism, and we saw that really well with the Unitree. Folks were coming in to trade the Unitree IPO for the first time, and then exploring some of the other markets available on Paragon's HIP-3 DEX.
Yeah, incredible. And do you think that this is a potential flaw in Hyperliquid in general, the lack of a spot markets? Do you think this in theory could kind of damage the potential value proposition of Hyperliquid as the house of all finance?
I think it's really early, right? If we look at the spot volumes on Solana or any other venue, by no means do I think that they're kind of hustling to play catch up here. So I think like having a very established existing Perps product, or I guess any sort of flagship product, always helps, having a wedge to kind of move into the things that are complementary and ancillary to what you're building. So yeah, I think we're just getting started, and now we're seeing some green lights, at least from Washington, that this is the way of the future. So
yeah. And that's been incredible to see. I mean, how significant is that? Given that we've already got HIP-3 and there's equities on the Hyperliquid exchange, we already got kind of the asset class. How important is the regulatory clearance to serve the U.S. market?
Important, right? Just given the size of American markets relative to the rest of the world. So for our business, I feel like it's probably the first or second thing that comes up as far as like the risk underwriting goes. So yeah, clarity on that side would be invaluable.
Yeah. And then is there anything else? Obviously regulatory clarity is huge and important to just continuing to lead this charge, but is there anything else, HIP-4, HIP-5, like what else are you looking forward to sort of put together another catalyst and kind of generate another wave of adoption here of the Hyperliquid ecosystem? Anything you're excited about, looking forward to?
Yeah, we think HIP-4 is a super interesting primitive. Beyond just the idea of building, a competitor to some of the other prediction market venues on there, we think that it's like a really interesting sort of, base layer for business building. And some things that maybe are a bit less obvious than kind of what we're seeing from Kalshi and Poly Market.
Yeah, very cool. And that's just one of the things that I think is going to just continue. Like, we're going to see more markets. We're going to see more asset classes. Tokenization super cycle is happening kind of right before our eyes. I'm curious how you anticipate this market unfolding. Is there, I realize keeping things close to the chest, but we had people come on, talk about Forex, talk about some of these different asset classes. Is there an asset class that you think is underexplored and underserved right now? I realize that, maybe part of the strategy you can't share, but anything that you can share with us that kind of helps us understand the direction for Paragon and Hyperliquid as a whole.
Yeah. Maybe I can share this. I think like when we think about, interesting markets that we can build, a lot of the time, the perp form factor falls flat. Just in terms of like being able to build something that's actually liquid and hedgeable, despite like, maybe being able to actually define an oracle and build it and relay that to Hyperliquid. So I think what HIP-4 does is really open up the horizon in terms of what is possible for a market. And I think what's really cool is you have this burgeoning RWA perps ecosystem with which you can make complementary products for. So perhaps I'll just leave it at that. But I think there's some Hyperliquid nativity that exists, which I think allows for some products that would, get a ton of volume on this exchange that maybe wouldn't otherwise on other venues.
And is that a result of having these things in the same venue with composability and cross margining across prediction markets and HIP-3 markets?
Exactly. Yeah. And I feel like if you're looking at the two primitives, right, in isolation, it's something like you'd never really be able to see, but exactly that, having them all under one umbrella starts to make the connections between them maybe a bit more obvious.
Love it. Yeah, that makes sense. And I'm excited, looking forward to those products. Before we let you go, I'm curious, I'm sure this information is out there somewhere, but could you just kind of unpack the economics of being a HIP-3 deployer? Like, I think, the most public figure is the amount of capital that's required to ultimately deploy a market and, get this listing out there. But what else goes into it? What other costs do you have to put in to ultimately manufacture a market on Hyperliquid? And what are the economics in return? What is the revenue profile of deploying one of these markets on Hyperliquid?
Yeah. So obviously there's the stake, right? And the idea behind the stake is a skin in the game. But we also think that it serves a purpose of, making sure that only teams that have the ability to run this infrastructure kind of surpass that first barrier. Outside of that, right, it's the 500, I guess now closer to 600 hype per ticker that you'd burn for every registration. And I guess that actually costs 25% more this week than it did last week. So that's a five, I guess now a mid to low 5-figure number.
Yep.
And then most markets are in growth mode right now, which means they earn, about 1 to 2 basis points, depending on the user's fee tier. And that is split 50-50 between the deployer and the protocol. So yeah, all of this volume at the end of the day goes back to buying back hype. As far as like the economics go, I think there's a bit of noise in the data right now, just given growth mode and this idea of trying to stimulate activity on the network. It'll be interesting to see where things settle, especially with compression and fees and TradFi. Like we saw that happen, and folks kind of thought about different models than transaction-based models to monetize their products. But yeah, that's kind of where things stand right now.
Very cool. And so I take it that the model that we've all kind of been thinking about, which wasn't really kicking during these apathetic market conditions because volatility was low, creates low volume, means low trading activity, means low amount of fees. But that's now changed, right? In the last week, we've gotten big announcements, more volatility, more trading volume, more fees, more earnings for both you and the Hyperliquid ecosystem, and goes to buying back Hype. How much of an increase, I mean, have you guys seen, in just the last week alone compared to maybe an average of the last few weeks?
Yeah, I guess for us, like there's a bit of a confounding variable in that we've made this big ticker push over the last few weeks and listed assets such as Unitree and Reddit before the S&P inclusion and all of these things. So we've been just, candidly, like we've been seeing some growth and breaking some numbers when it comes to volume and users, and we're super grateful for that. So yeah, I guess it's hard to tell like where the pickup happens here. I think we're really excited, with this pickup on rates discussions, as well as crypto kind of having a comeback for the products, both the crypto native indices we have, as well as some of the other rates products we have coming down the pipeline to be positioned right for when that narrative is really front and center.
Yeah. Well, congratulations on that growth, and thank you for spending some time with us today. You guys, are contributing to the Hyperliquid ecosystem. We're big believers, and it's very cool to see the growth from Paragon and ultimately a more competitive HIP-3 deployer market. So thanks so much for spending the time, and congrats on the growth.
Thanks so much. Thank you for having me. It was a pleasure.
Absolutely. We'll see you again soon.
Cheers.
Thanks, Taha. All right, guys. Beautiful. Well, that's where we're at. HIP-3 deployers cooking, volatility up, volume up, revenue up. Bessent up, market down a little bit off his press conference, but we're going to keep things rocking and rolling. I think that was our last guest for today, but we are going to provide you with our daily equity segment powered by Denari. And we're going to share that with you guys in a moment. We'll check in the market. Bitcoin looks just fine. Down 0.5% in the last hour, still up on the day. ETH pretty much holding up as well. Hyperliquid down a little bit in the 70s on Hyperliquid. Zcash holding above 800, near just under $2. So that's what we're watching. That's what we're watching, guys. Okay. So all in all, seem to be holding up. Obviously, big sanctions. We're going to be hearing more about that. Probably later this week, we're going to hear more about sanctions. It's going to be a little bit more of a negative force on the market. But September 9th, we heard, is when they're going to actually execute this buyback. That's when they're going to have this Treasury operation. So more of a positive force in the market. So it's going to be a little bit of a push and pull here over the next few weeks. But I'll just come out and say I think dips are for buying. That's what I will be doing on my portfolio. And I anticipate that the positive forces in the market are stronger than the negative ones. Bessent needs to use that 1 trillion and buy some Bitcoin for the Trump account. He absolutely does. I think we're going to be seeing some of that Treasury general account drained and put into the market very soon. Guys, we're going to play our daily equity segment as our last segment for the day. Don't go anywhere. We're going to close out strong right now. Daily equity powered by Denari. These guys tokenize the entire S&P 500, and they are on the forefront of the tokenized equity build out. $100 trillion asset class coming on chain, flooding DeFi protocols and re-rating the token economy. Today on daily equity, we have railroads. We're 63% of the entire US stock market. Another AI to railroad comparison, not 63% of transport stocks, but 63% of everything listed. That was railroads of the entire US stock market. The history of concentration. So we're going to give you guys a little history lesson. Tulips were first in year 1637. A single bulb traded for the price of an Amsterdam canal house. That was the tulip bubble that people like to reference so much here in this industry when we're talking about bubbles. South Sea Company, 1720 shares went from about 128 to over $1,000 by the summer, just 6 months later, then back to 150 by the end of the year. Massive bubble. U.S. railroads, 1840, 63% of U.S. market cap. Took a little bit longer for that one to unwind, but ultimately that pumped and popped as well. Utilities, telecom, industrials, 1929, 36%. Nifty 50 in the 1972, 40% of the market. Japan, 1989, 44% of global equity. .com bubble 2000, 41%. AI Big 10 today, about 40% of the market. Let's see what the take on this is. We obviously know that there's several bubbles that have existed throughout time. AI is nearing that level of concentration. Every one of them was built on something real. Railroads did compress a continent. The internet did rewire commerce. Being right about the technology was never the thing that protected you. The tulip story is also less clean than the legend. Modern research found the economic damage was modest and the ruin was mostly literary. So a lot of narrative talk about the ruin from the tulip bubble. The bubble was never in the idea. It was in how many people decided to own the same idea at the same time. This is arguing that the concentration is the problem. And so obviously you've seen this be, throughout time. You see railroads, Nifty 50, TMT, utilities, Japan, and now AI approaching similar levels of concentration in the market. So what happens when the market gets so concentrated that everyone is in the same thing? Well, if everyone's in, how does it continue to grow? Who is the next buyer, right? And ultimately, this is why we've seen and heard calls for the US government to bail out AI if this bubble pops. Also, are they going to bail out the stock market if it pops? We are seeing more involvement from the government actually owning equity in these AI companies. That is getting more calls for more of that as well. And so ultimately, if you want to keep the music playing and the train rolling, well, you need some new entrant, someone that has yet to participate and enter the market, that is still on the outside looking in, that we can use to potentially tell a story for growth. And we may not see that unless those who own the equity control the money printer themselves. And I think that is what this is trending towards. We know how much Bessent is attempting to bring yields down. They're doing this, and at the same time, they're talking about growing their way out of the debt, which means that if they can bring the yields down, they still need to pour a ton of money into what they believe is going to fuel the productivity in order to grow their way out of the debt. So they need these things to keep going. They cannot allow these things to stop and crash because it would ruin their plans politically, and that would end their reign of power. And so we're seeing the government take equity in more of these companies, the AI Big 10. And if they do, and at the same time, they create accommodative monetary policy, then it could be the case that the stakeholders of these companies can literally print the money and put it into their own holdings, thus printing the money to pump their own bags and keeping these things growing and inflating the debt away. This is a potentially very precarious scenario. There's multiple variables that all sort of have to fit together correctly for this to work. If they can get inflation down and they can get productivity up without printing too much money, that is a very, very tricky tightrope to walk, but that's what they're attempting to do. We're going to see if it works out for them. This has been the latest segment of Daily Equity. Big shout out to Denari for tokenizing these equities and serving them on chain to all of us and all of you. And guys, that wraps up today's show. So thank you everyone for watching. Hope you guys enjoyed. I mean, absolute banger guests that we had today. We had Trevor from Lighter. We had Seth from Franklin Templeton. And we finished it off with Taha, a founder of Paragon, the HIP3 deployer. You guys can see the green tinge on the left side of my screen or the right side of my screen. And so the force is strong, right? There's a red force over here, right? We have Liquidity supply from the treasuries over here, buying the long end of the curve. Liquidity injections, preheating the money printer. That's green. You can see that. That's a strong force. Over here, there's actually red. You can't even see it because it's not very strong. Green is stronger than red. And this has been the Rollup, August 24th. Thank you so much for watching. We're going to have an incredible show for you guys tomorrow as well. And I gave just a little bit of a shout out to everyone that we've got on this week. I mean, tomorrow, Aerodrome, Grayscale, and Codex join the show. You guys are not going to want to miss that. Thank you so much. Give me some W's in the chat. Freedom Guy, you rock. Big shout out, Freedom Guy. Big shout out, Little Miss Gun. Couldn't do it without y'all. Andy's in the chat. He's going to come back very soon. He's hanging out with the Moose. Edward, big lighter fan. Hope you enjoyed Trevor today. Freedom Guy, Little Miss Gun, Edward. I think we got a couple new faces in the chat as well. We appreciate everyone rocking with us and keeping it lit in the chat. And so, guys, stick around. We'll see you guys tomorrow. Another great show. Don't go anywhere. We'll be back. We'll see you guys tomorrow.